friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another charting education video. If you're new here, I created my channel to help as many people as possible become independent and profitable traders. So if that's something that you're looking to do, you're in the right place at the right time. So welcome and thank you for spending some time with me today. If you are a returning viewer, welcome back. If you have not yet subscribed, make sure that you hit that button so that you can stay in the loop for when I post new videos. Now, I did post a video almost every day in the month of December, so there is a lot of content to catch up on. I encourage you guys to get nosy, explore, and see what else is there. And if you don't see a quick video for something that you'd like to know more about, just leave a comment down below and I will do my best to make that video. Now, in today's quick video, we are going to be looking at the 15-minute time frame, and I'm going to be showing you guys how to trade with confidence but without indicators. I feel like a lot of new traders tend to be overwhelmed with having so many things on their charts when it doesn't have to be that stressful or that serious. If you have a simple confirmation checklist and you know what you're looking for, it will not only improve your confidence in your trades, but I do believe it will help you to become more profitable. So the reason we're going to be working on the 15-minute time frame is so that we can see our trades play out a little bit quicker and we don't have to wait hours or days to get some results because I know that can turn people off as well. Now, trading is a game of patience and it is a game of waiting. So sometimes you can't get around those things. But because the foreign exchange market is a fractal market, meaning you'll find similar patterns on every time frame, you are able to trade on the 15, trade on the 5, or whichever time frame you choose. I think the 15-minute is a good medium for people who want to scalp, meaning you're in and out of the market with your profits, or for people who want to stay in the trade throughout the day, or even hold for a little bit longer. But the more you trade and the more you practice, you'll find where you're comfortable at. Because my goal is to not get you to trade like me, but more so to get you to trade more like yourself, figure out what your strengths and weaknesses are, and start to actually make withdrawals from the market. So again, we're going to start on tradingview.com. I'm going to be looking at Euro USD today, and I'm going to be looking at this on a 15-minute time frame. Now, to make this fair, I am going to put the chart in replay mode, but instead of choosing what I want to analyze, because we know what the outcome is going to be, I'm going to select a random bar, and then I'm going to follow my confirmation checklist to see if it's actually valid and does this make sense. So the first thing that I do when I enter into my trades is I like to identify what those obvious highs and lows are. Now, these are going to be areas that I'm going to target either for my entry points, my pending orders, or my take profits, meaning if the market reaches a certain level, my trades will be closed in profit. And this is always going to be the second step behind checking the news. So I'm going to put a horizontal line pretty much anywhere I can see the market had some type of reaction in the past. So I can see that the market came down to this level, not only one, two, but three times. So within 45 minutes, we had the market revisit the same zone, making $1.08 a strong area of support. Now, support is what you will find at the bottom of a selling trend. And when price is supported in an area, you'll typically see it buying after that versus an area of resistance where you see the market has come into a zone, but it hasn't gotten any higher. And after that resistance, this is where we tend to see sells. So if you guys understand the difference between support and resistance, being that support is found at the bottom of a selling trend signaling buys, and resistance is found at the top of a buying trend signaling sells, just go ahead and drop a 7 in the chat. Now I'm going to continue to put as many of these horizontal lines wherever I see any type of support and resistance. Because if I'm going to be entering this trade for a buy, I know that those previous areas where it's sold are going to be my target areas for profit. So that could be a potential TP1. This could be a potential TP2. This could be a TP3. And then ultimately, if the market were to create a new high, I would set my swing high at TP4. So if that makes sense, just go ahead and drop some sevens in the chat. And again, all we did was highlight previous highs and lows. So now the next thing that I'm going to do is just ask myself a couple of questions. So the first question I ask myself is the market near an area of support or is it near an area of resistance? Now I can see that my candle is closer to areas of support. So that's going to be one bias for me to enter this trade for a buy. Now, because we're not using any indicators, the next question I will ask myself is, has the market broken structure above or below the previous trend? Now, a break of structure is exactly what it sounds like. We can see that at one point in time, the market was consolidating in this zone, meaning it was buying and selling in the same range until there was a literal break of structure below, pushing the market down for a sell. Now, a buy example would be we can see the market was consolidating in this zone for some time, buying and selling for a period of 15 minutes before we had a break of structure with this blue candle and the market bought back up to a previous high. So I hope you guys are following along. Just drop a 7 in the chat to let me know if that made sense. So I'm just going to pretty much wait for a break of structure, either up or down. If I have a break of structure down, I will take this trade for a sell. If I have a break of structure up, I'm going to take this trade for a buy. But either way, I'm not going to rush the process. I'm just going to wait. So to make this fair, let's go ahead and put the chart in replay mode, and we're going to select a random bar to see if this strategy actually works and if we will be able to be profitable. So the first thing that we're going to do after we check the news is we're going to make sure that we are identifying these previous highs and lows because these are going to be the areas that we're going to target for our profit. Now, the next thing we're going to do is just simply ask ourselves a couple of questions. Is the market near an area of support or resistance? If it's near support, we could potentially get in for a buy. If it's near resistance, we could potentially get in for a sell. But if you're just unsure, you want to just wait for a break of structure, meaning that if we can see that the market is selling here and buying here every time, once it breaks above this high, we will enter for a buy targeting these areas. If the market breaks below this line, we would enter for a sell targeting previous lows. So let's go ahead and see what happens and wait until we get that break of structure. Okay, so we see the market is still consolidating. And this is exactly why you want to wait. You don't want to make any quick moves. Now, we almost had a break of structure on that 15-minute candle, but it didn't quite happen yet. And I love that we're doing this in slow motion and in real time. So you can see that you don't want to jump the gun. Sometimes you just need to wait. So we do have a break of structure here. If you don't feel confident about that entry, as we can see, the next candle was pushed down. You can just wait until you get something a little bit more clear, like the market crossing and closing above that previous area of resistance. So let's just say we felt confident about this trade. We take it for a buy. We set our TP at that previous high. We set our stop loss at that previous low. And then we just wait for it to play out. So we can see the market actually came close to hitting our stop loss and revisiting that previous low. However, it did continue to push up and that previous high was taken out. It didn't take that long. We can just check and see that from our entry to our take profit was about 8 hours, and we were able to secure a couple of pips there. And not only that, the market did continue to push up, And as it plays out, I'll just put some horizontal lines here so you can see how if it was to continue to buy, it would just be taking out those previous levels. Just like if it continued to sell, we can clearly see the levels that it is going to be revisited, making our entries for the trade more valid. So I really hope that this video was helpful. It is just a matter of patience and waiting for that break of structure. But again, once you've identified these key levels, you'll notice that you already have your take profits. You already have your stop losses. You already know exactly where the market is going to go. You just may not know when that's going to happen. So I really hope that this video was helpful. If you want to see more live backtesting videos like this, just go ahead and let me know in the comments. If you have any questions or suggestions for future videos, I am open to hearing that from you guys as well. Now, if you would like to register for my online course where you can watch the videos in a specific order and build on your knowledge, get weekly trade ideas, and work with me one-on-one, that information is down below in my description box. But that's really all I have for you guys today. Until next time, rich friends.